Hello and welcome back to another episode of the Wilson Weekly. I'm Rachael Howlett. As always, I have the absolute pleasure of sitting down with one of the most respected voices in the Australian property market, Dr. Andrew Wilson. Today, we're diving into everything from labour market strength to shifting migration flows to what's really happening on the ground in our capital states. Doc, so good to have you back. I know it was your birthday a couple of days after mine, so happy belated birthday.
Yes, you too, Rachael. Thanks so much for reminding me of that. But that's all good, and I had a nice birthday, so I can appreciate the sentiments. And we have another big show this week. We're right in the middle of nearly sort of getting towards the middle of winter, and housing markets are just showing those signs of running out of puff, which they usually do this time of the year. School holidays are starting across the board. I think Queensland's up this week and then follows New South Wales and Victoria. And this, of course, is the part of the year where we all have a bit of a break, and the property market has a bit of a break. But it won't be too long before it's up and running again, and we'll be talking about the spring selling season. But that's a long way off. Yeah. Well, not really a long way off, but it's a way off. But we do have some interesting news today, Rachael, as usual, this week in property. Of course, brought to you by the good folks at Infinity and My Housing Market, which is our brand here, which looks at the current state and future prospects of housing markets. And of course, we bring you all the latest data every week. Hold on to your hats for next week, because we will have the latest June house price data, not just houses, but also units. And we'll see what impact the cuts to interest rate this year have had, or interest rates this year have had on house price growth. So that's next week. But this week, we're looking at some key drivers, particularly in relation to interest rates. And that, of course, is about how our economy is performing. So this week, Wednesday, June the 25th, few birthdays happening around this time. As Rachael mentioned, we're moving from Gemini into Cancer, if I can say that. But that's the way it is in terms of the horoscope. But we'll look at some bit more serious science today. Starting with the latest ABS labour market data for May. Very important, the labour market data, because it is a key indicator of the strength of the economy, and it is a very important factor in the Reserve Bank's decision on interest rates. Two factors really determine interest rate policy, and that, of course, is inflation, which we've been focused on for quite some time. Looks like that's under control, but never say never in terms of what's going to happen with inflation. But the other factor is the labour market, which broadly tells us what's happening in the economy in terms of sort of individual performance. And we haven't really been focusing on that because our labour market's been pretty strong. In fact, it's been really strong for quite some time now. But, maybe the Reserve Bank will start shifting its focus onto what's happening in the labour market now that we look to have some control over inflation. So it's important that we do look at what's happening in the labour market, because it's a key signal for what's going to happen with interest rates. And also a key driver of our housing markets is population growth. And we've had a bit of a roller coaster ride over the last few years with population growth, particularly in relation to migration, of course, through the COVID period. Borders open, borders closed, borders open again. So that's created a real roller coaster ride in terms of migration. Of course, migration generates demand for housing, obviously, and we've seen some results of changes, or that roller coaster ride in migration in relation particularly to the rental market, because internationals, when they come in here, typically first port of call is the rental market. So we'll have a look at that latest data. And as usual, the latest weekly auction results. As I said, Rachael, just starting to run out of puff a bit. Our markets, no surprises, we're now moving into the holiday period, the mid-year holiday period, but still showing plenty of life, our auction results, particularly in relation to clearance rates. So we'll have a look at that as usual. So let's start off with, once again, and it's a bit of a cliche now, strong labour market holds steady. So yes, the data told us that again over May we had a 4.1% unemployment rate. It's been around about that for the best part of a year, Rachael. So we're really holding steady in terms of that low, and it is a low rate at 4.1%. But we've had a little bit of ups and downs in terms of the number of people employed month to month and the number of people unemployed month to month. So maybe a little bit of a question mark. This is seasonally adjusted data. Maybe we're still having some post-COVID issues with the seasonal adjustment models for particularly our labour market. We had a very strong figure last month in terms of jobs growth. It was around 80,000 jobs created over April compared to March. But we've gone the other way over May compared to April, where we were down 2,000 jobs. We lost actually 2,000 jobs. So, a bit of a question mark over that volatility, but nonetheless, the unemployed numbers were also down after rising the previous month. They actually fell by 3,000. So lower jobs, but also lower unemployed meant that the unemployment rate remained steady. So we have been creating a lot of jobs over the past year, up 2.3%, 329,000 jobs created over the past year, but the number of unemployed up by 28,200. That's a 4.8% increase. But the unemployment rate's been pretty steady over the past year. The big number really, and we don't want to get too technical here, is the participation rate. Still at that near record 67%. Now, the participation rate is very important because it tells us the proportion of the potential workforce that's actually working. And when we get a very high number, it means that we're dragging people into the workforce that are perhaps retired, perhaps self-employed, because there are so many job opportunities that it is bringing more people into the actual workforce. So a low unemployment rate with a high participation rate is exactly what you want if you're looking for a strong economy. Queensland bounced back, had the lowest unemployment rate, quite a low rate there at 3.7% over May. And of course, we know those lower interest rates will continue to support a strong labour market. People are paying less for their mortgages, so they've got more money in their pocket. We know people are still spending, so they've got more to spend. Of course, that means businesses have more demand, and that means businesses have, the potential to employ more people to satisfy that higher demand. So lower rates are good news for the labour market. And if we would just look at
there we go. We've only been doing this podcast for 3 weeks and we're already in sync. You knew a question was coming. So,
okay.
Yes, I do have a question. I'm very excited about that 67% participation rate. With that sitting at that new record, are we seeing this translate to greater buyer confidence in the property market?
Well, look, this is the other point, Rachael, that the labour market is a very important factor in terms of property market activity, because we do see, as the labour market starts to weaken, as the business cycle starts to ease, and we do get higher unemployment and perhaps a lower participation rate, it of course affects confidence because, buyers and sellers start to think, hey, I'm a little worried about my job. We don't get the same potential for wage increases because there's not as much competition, because there are, more people looking for work and fewer jobs. So it does have a material effect when we do see that start of a shakeout in the labour market. But we have anything but that at the moment, and that's the point. People don't have concerns by and large over job security because we do have that high participation rate and the low unemployment rate, which means there's by and large, plenty of job opportunities out there. So you're not worried about, hey, if I lose my job, I can't get another job. There's plenty of energy still in our labour markets. And as I said, that's the perfect balance, a low unemployment rate and a high participation rate. And I think that's really, what we would see in terms of a longer term easing in housing market activity would be if we started to see unemployment rates really pushing upwards. And I'm talking 5, 6, 7% we'd need to see before we saw a significant, postponing of those big buying decisions, particularly for property. But, it's all good at the moment, Rachael, and it remains a very positive statistic going forward. And that's the point when we look at the trend. We've just about been around about that 4% for the past year. We had very low rates through 2003, very low rates. And there was a sense, okay, when that started to rise, that was going to be a shakeout in the property market, in the labour market, caused by higher interest rates. It just didn't occur. And we've been around that 4.1%, as I said, for the best part of a year. And really, in terms of the history of low unemployment, we go back to that very strong period in Australia's economic performance, which was the noughties. I think we call it the noughties. Prior to 2010, we had a massive mining boom. And even then, that's with that very strong growth in the economy at that period, our unemployment rate was at around 4%. But we actually had a lower participation rate then. So this is a very strong, historically strong result, and it can only be positives, as you suggested, Rachael, for our property markets going forward. And as we saw with the headline data, Queensland has the lowest unemployment rate over May, seasonally adjusted, 3.7%, down from where it was a year ago. Other markets up just a little bit from where they were a year ago, but certainly still low unemployment rates in all of the states, just at or above 4%. So with the exception of Queensland, which had a very strong result, most of the other states were really same old. So nothing really to indicate a shakeout on a state-by-state basis in the labour market. So let's have a look at migration. We mentioned we will look at migration. Very important, of course, migration, because as people come in here, particularly, international migration, they've got to live somewhere, Rachael. Come on, and that means demand for housing. And we know we're in an undersupplied market. We're not alone here in Australia with that. Most other advanced economies haven't got enough houses to go around. It's an international problem with advanced economies, and we certainly have that same issue here. Australia is a high migration country. Did you know, Rachael, that Australia takes more per head of population in terms of migrants than any other advanced economy in the world?
No, I did not know that.
And yet we do pretty well. We don't have a lot of the issues that, say, the US have in terms of migration policy. We seem to, keep on keeping on. We get on pretty well with this. Our biggest problem is finding enough houses for our migration. And as I said, we're not alone here. And it's not just about migration. It's about, the fact that we've really moved away from our supply side modelling, being able to provide more housing, not just for our migrants, but for everybody. And that's, I think, the biggest challenge for our housing market is to find more housing. And as we did last week, we look at the building approvals every week, and there's no sign of that improving. So the latest data from the ABS shows us that migration is easing. This is the full year data for on a year-by-year basis. So that's the December quarter versus the previous December quarter. You can see that big falling away, firstly, through the COVID period, where, of course, we locked our borders. That was the end of international migration. There were lots of predictions that would be doom and gloom for the housing market. Didn't occur. In fact, it was just sort of more pause mode. We bounced back when our borders were open. You can see that big lift, particularly in New South Wales and Victoria, which are our big migration states, of course. But we've seen a considerable easing over the past year in terms of our migration intake. And that's been policy driven by the federal government. The federal government has reduced considerably the number of international students coming into Australia, which doesn't make, obviously, our university sector very happy. It's a key part of our economy, but the government was concerned that we didn't have the infrastructure to match those very strong numbers that came in following the end to lockdown. So, and our borders opening. So all our states have recorded drops over the past year in terms of migration. And part of that, Rachael, has been responsible for the easing in rental growth that we've seen over the past year as well. So I suppose good news there for a bit more balance in the housing market. But, as I said, it's an important economic driver for us, international migration, and particularly students and our universities aren't that pleased about seeing those numbers drastically reduced, but you can quite clearly see how that's changed. So let's have a look at the breakdowns. New South Wales, this is the net, that was the total migration numbers. That's net migration numbers we saw. This is international migration. So this is the difference between people coming into these particular states and leaving the states. New South Wales, as usual, has been for a while, leads the race for international migrants if it's a race. Typically that's Victoria, but Victoria's been lagging a little bit compared to New South Wales recently. Again, this is the number of, I guess you could say, new housing that we do need over a year to satisfy those annual migrants coming in. So those numbers are still quite substantial, but as I said, less than what they have been, particularly over the post-COVID lockdown period. So net interstate migration. So that's the difference between people coming into the state, into a state and leaving a state. And we did see some big changes during COVID as well, which did influence housing market activity. We saw a surge in migration out of Victoria and New South Wales, particularly Melbourne and Sydney, due to severe lockdowns. We saw a surge into southeast Queensland. Perception was it was perhaps a safe haven environment during COVID. That created a lot of demand for property in those southeast Queensland markets particularly, and we saw skyrocketing rents and prices. We're getting prices, and we're getting back to a bit more of a normal environment here. So this is the annual change in net migration on a state-by-state basis. Queensland's still gung-ho there, so those strong Queensland markets will continue to benefit from very strong interstate migration. This is net migration. So these are actual new entrants into the market for Queensland. So again, more upward pressure on prices and rents. Victoria's just dipped away a little bit recently, or over the past year. It had started to pick up, but down marginally over 2024 compared to 2023, and this is December quarter data. And as usual, New South Wales is always has a high number of net loss, or a high net loss of interstate migrants, and clearly the underperformer there in terms of migration change, interstate migration change. But Western Australia, that's an interesting result there, Rachael. Western Australia, very strong. So a lot of people moving out into the west, and I think that's part of what we're seeing for high demand for property and higher prices. Of course, this is over the year. We've had a little bit of change. We'll look at that next week in terms of what's happening in real time in terms of housing market activity. But I think interesting to see that high number of net migrants coming into Western Australia. Same old and same as New South, is in terms of New South Wales, and same old in terms of Queensland.
Yeah, you're really seeing some strength there in Queensland. So what opportunities do you think it creates for our property investors eyeing off that state?
Well, people have got to live somewhere, Rachael. That's the point. And Queensland, in fact, when we looked at that building approval data last week, you might remember that Brisbane actually had a net loss in houses over the years approved for building. So they're getting this constant surge of migration into Queensland, and yet they're not keeping up with new building. And that's a little bit challenging. Units are certainly on the move in particularly Brisbane, development in Brisbane. But of course, that takes a couple of years for it to become, a live-in property. So, good luck in a couple of years. And then we've got the, Olympics coming on as well, which will likely see an even bigger surge in migration, even post-Olympics, into Queensland. But yeah, those 25,940 people have got to find somewhere to live, Rachael. And they'll probably start most of their journey in southeast Queensland, Gold Coast, Sunshine Coast, Brisbane. So that'll only mean upward pressure in an undersupplied housing market, which will mean, and of course we've got lower interest rates as well, that makes property more affordable. So it's ticking all those boxes for higher prices and higher units, and validated by those very strong numbers again for Queensland migration.
Well,
so shall we have a...
Sorry,
yes.
you mentioned You mentioned the rate cuts, actually. So I had a question on that, going back to the labour market, the strength in the labour market. Do you believe this strength might delay further rate cuts from the RBA?
Well, that's a really good question, Rachel, because it's been a very unusual period of rate cuts. Of course, we had the rate cut in February, then we had a follow-up in May, and yet we're cutting rates when the economy is clearly strong. And really those higher rates it hasn't really been the higher rates that have pushed inflation down. It's been an easing in the price of fuel, which is an international factor, and it's been the government's electricity bonus that's really been the main factors for getting inflation down. So it really hasn't been higher interest rates. And here we are cutting rates in a very strong economic environment, which will only make it stronger, as we discussed before. Usually we cut rates when we need to put our foot on the gas and give a little bit of impetus to a weakening economy. And this time we're going the other way around. So it is interesting. It's a little unusual. I think the Reserve Bank are what you might call a little dovish on interest rate policy. They're more likely to cut than to rise. Maybe if you want to think about it a little deeper, they're cutting rates so they'll have potential to raise rates if inflation starts to rise again. Maybe that's what they're worried about. But it is unusual to see rates being cut with such a strong economy, because it's only going to strengthen the economy, as we said before. But, hey, let's not second guess this, because it's good news for those that have a mortgage, because it means that they can they got more money in their pockets with a lower interest rate. And, of course, it means higher prices. And we'll validate that next week when we get the latest data. So let's have a look at the latest auction results, shall we, Rachel, for to finish off this week. Of course, as I said, we're now starting to see the beginning of the quiet midwinter, mid-season, mid-year housing market. Holidays are starting everywhere this week. So we're seeing fewer properties coming into the market. Still good numbers though, but our clearance rates are holding up despite lower numbers of properties. And that Melbourne market continues to produce very robust results. Another result above 70% clearance rate, and we can really validate what we've been saying about that Melbourne market reviving now. But again, we'll wait for the price data over June to give us a clearer indication of what's happening broadly in the Melbourne market. But another good result there. And as I said, the next few weeks will run out of puff into July and early August. There will be fewer properties auctioned. It's the mid-year market. And we certainly get fewer higher priced properties coming into the market over the next 6 to 8 weeks, which is typical of what we see during the mid-year holiday period. Let's have a look at the numbers. Sydney numbers down a little bit over the week, but another good clearance rate there for Sydney. Strong result, over 75%, and tracking where it was a year ago. Melbourne, as I mentioned, another 71%. Good news there for Melbourne. But as with that quieter market approaching, we had fewer auctions. But again, even though it was a good result for Melbourne in relative terms a year ago, we're still tracking higher than where we were a year ago, that Melbourne market. Brisbane up a little bit, but always floats around that 50% mark, with actually higher listing numbers in Brisbane. Adelaide had a bit of a bounce back, Rachael, with a 75% clearance rate. That Adelaide market has been sort of running out of puff over the past couple of months, and following what it was last year, the strongest auction market in the country. Maybe some signs there of a revival now coming through in Adelaide. Again, prices data next week will reveal that in real terms. And Canberra's a little bit 2 steps forward, 1 step back in terms of its clearance rate. Had some good clearance rates recently, above 60%. And we're thinking, hey, is Canberra back in town? Well, who knows? But not so much on that result last week, which has been sort of where Canberra's been, where we've expected to be in the mid to high 50s. But it has been mid 60s for the last month. So, but we are moving into the quieter period. We wouldn't expect to see those clearance rates at least rising until spring. But we still need to look at Canberra over the next month or so to see if we can call that a reviving market. So when we look at the trends, Yeah, good start. Good year for Sydney so far, really in the mid-70s and tracking higher than where it was a year ago, and certainly higher than where it was at the end of last year. Good results there for that Sydney market. And Melbourne, here's the real story in terms of a revival. Look at those clearance rates in Melbourne compared to a year ago and the end of last year. And that's what we'll likely see translate into higher house prices. Good results there for Melbourne. Brisbane, same old, just picking up a little bit over June compared to May and some of the earlier months. But those clearance rates are not as clearly an indicator of activity in Brisbane as they are, or general activity as they are in the other housing markets, where we know Brisbane's prices still rise when we get 50% clearance rates. Adelaide just starting to pick up again with a quieter start this year compared to how strong it was last year. So again, we'll wait and see what the prices data tells us. And Canberra, look, it's best result for some time over June, but it's coming from a lower base. And again, we wait to see if there's a more consistent revival in the Canberra housing market over coming months. If you're looking for those latest auction clearance rates, you can get them on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday at 6 o'clock. And the full national report comes out on Sundays at around about 9 o'clock, which gives you the regional breakdowns for Sydney and Melbourne, which is good to see what the local areas are doing in terms of the auction market results. And it also gives you the top 10 sales out of each of the capital cities under the hammer over the week. So get onto that one, Rachael. And if you've missed the latest auction weekly report, there is a QR code and you can get a link to a PDF copy of that file. So, let's move on to our final slides as usual, and that's about my housing market Infinity housing market data app. If you're looking for suburb base or suburb level data, this is the perfect instrument for you, and it's a great little resource. You need to get a password. It's password protected, and you get that from the good folks at Infinity. But it's well worth having this app because it gives you data on every capital city in Australia that has data. And here's a screenshot. It's the latest asking prices and asking rents for every suburb in Australia in real time. So it gives you a sense of what markets are asking at the moment. So what agents and what sellers are asking for their properties, as well as other data. You can filter it down to low levels of focus. So you can either have price or rent. You can have the capital city region or the outside capital city region. We're looking at New South Wales, Sydney region here, suburb of Blacktown. You can filter it for house unit or townhouse. We're filtering it this for house. And also you can filter it for the number of beds. And so the search result here gives us not just the median asking price for a 4-bedroom house in Blacktown, but also the low and the high. So you know the boundaries between the high asking price and the low asking price, as well as the middle, and the number of properties for sale. Do exactly the same thing for rents. You can see the result there for the rental market for a 4-bedroom house in Blacktown. And we also have something for investors here, which gives you on the same breakdowns, regional breakdowns, the top 10 yields for each suburbs in those regions, as well as the vacancy rate, the rent, number of properties for rent, and the number of properties for sale. So next week, Rachael, as we've predicted, as we've previewed, June house and unit prices, we're going to look at the May inflation data, which of course is important because it gives us that other sense of where interest rates are going, not just what we looked at today in terms of the unemployment rate. And as usual, the latest auction results. So I think that's done and dusted. If you've missed the report this week, there is a QR code and you can get a PDF file for all the data that we've used. So I'm really looking forward next week, Rachael, to the latest price data. I think that I'm not going to give too much away. I think it's going to be pretty exciting. So look out for that one. And we are always the first with the latest in terms of house prices, particularly, and unit prices. So a good one. And of course, the inflation data is critical to the Reserve Bank's inflation decision. So I think we're getting out of here on time, which is really good. Until we meet again next week, Rachael.
I'm very excited about next week, Doc. Thank you so much for sharing your time and insights with us today. Your data always helps bring clarity to what's happening in the market. For those tuning in, if you loved this episode, be sure to follow the Wilson Weekly on the Money Mentor podcast and follow Infinity Group's socials to continue your financial education. Thanks so much again, Doc. So see you next week.
Thank you, Rachael. Yes. See you later.